Congratulations on taking this first step towards gaining control over your finances. I'm Anne Hannon. I'm the CEO and co-founder of the Professional Bookkeepers Academy and Sort My Books cloud accounting software. I know that as a business owner, you know your business better than anyone else. How is it then that you find yourself sitting with the revenue or the bank or even your own accountant and find that you don't recognize your business anymore, that you can't tie back the numbers they're using with the day-to-day decisions that you've made, the money you know is in the bank, the sales you know you made, the expenses that you paid for, and worse, when you ask a question to try to figure it out, you find that the answer leaves you even more confused. I'm going to prove to you that you know this stuff already. What's happening is it's getting lost in translation. You know the set of accounts you get every year end from your accountant? Do you ever do anything with that? Is it maybe here somewhere? Or maybe you have it filed neatly away? But I'm going to bet it doesn't mean a whole lot to you. Let's look instead at things that I know you know. On the left-hand side here, we have the work I charged people for, or how your business makes money. What are the things that you sell that you get paid for? And then underneath, we have materials, products to sell on. What that means is, what did you have to buy in order to fulfill that service to your customer? Underneath that, we have things like advertising and insurance, telephone, the day-to-day things that you need to spend to keep the business going. On the right-hand side, on the top, my new van. So what are the things that your business owns? The big items that you purchased for the business that you needed to run the business. Underneath that, money you're owed by customers. Underneath that, we've got money you've got in the bank. It could be cash that you have on hand as well, cash in the till, cash in the safe if you're a retailer. Then we got suppliers that you owe money to. And who does the business owe money to in terms of loans, leases? And then we have the sum of all the profits or losses that your business has made since it began. Now, have I said anything in the last minute or so that you don't understand? Are there any of these items and you're thinking, I have no idea what she's talking about? Or can you relate back all of these items to your business, to your day-to-day experience of running your business? I'm willing to bet that you can. Let's then put some headings on these. Let's translate it into accountant language, banker language, revenue language. Fixed assets, those are the big items that your business owns. They have a value, you could sell them on. That's how you would determine whether it's a big fixed asset versus the items on the left, which are an expense like advertising. You can't sell that on, whereas if you buy a van, you could sell the van and recoup some of the money you've spent. Debtors, that's just the term, the accounting term that's used to describe the customers that still owe you money. Creditors, that's the accounting term to describe the suppliers that you haven't yet paid. Suppliers that you placed an order with, they fulfilled that order, and you still need to pay them. Money that's outstanding to those, that makes them creditors. On the left-hand side, the work you charged people for, that's your turnover or your sales. Cost of sales is anything that you needed to buy in order to fulfill the turnover or sales. If you're a retailer, it means the stock that you buy in. That's your cost of sales. If you're a tradesperson, it means the materials you buy to fulfill the service. Now, there's some service-based businesses, we may not have cost of sales. Not all businesses do. Business expenses, also called overheads, fixed costs, running costs. That would be the items that you spend, and that keeps the business going. It keeps it open. Advertising, insurance, telephone, accounting fees, There'd be a lot more. There could be waste disposal, but you get the idea. Those are your business expenses. And then if I put an overall heading on this, the document on my left is your profit and loss. The turnover minus the cost of sales, that is your gross profit, or your gross margin, you might have heard it called also. And then if you take your gross profit and you subtract your business expenses from it, then you end up at your net profit. And then the sum of all profits or losses that you've made since you started the business, that becomes retained earnings or capital brought forward. You may have seen that on your set of accounts and wondered, what is that? In a later video, we'll go into more detail about how that's calculated and what it means. When we put a heading on the document on the right, we can see that that's our balance sheet. We'll go into both of these documents in more detail in further videos. As a quick explanation, profit and loss describes what your business earns. Your sales minus your purchases equals your profit. The balance sheet is like a snapshot of what your business is worth. Just a few more terms to go through. We'll go on to the balance sheet in more detail. You've heard assets, liabilities, capital. I'm sure you've heard those terms. What it means in view of your accounts: your fixed assets, debtors, money you have in the bank, cash on hand, good things, in other words, things that are worth money. Those are your assets. On the other hand, where are the things that you owe? Those are liabilities. Creditors, those are suppliers you owe money to, loans that the business has out there, those are all classed as liabilities. The capital, as we said before, that's the retained earnings, so the sum of all the profits or losses since the business started. And if you're a limited company, it would also include share capital. The balance sheet and how the balance sheet works is your assets minus your liabilities equals your capital. We want to make sure that all of your business spending is included in your business expenses. You'll see in future videos why that's so important. Well, actually, I'm showing you right here. It's because you're taxed on your profits. So you want to make absolutely sure that you've captured all of your expenses accurately in order that you don't end up paying too much tax. Our next video will go into much more detail on that, on calculating your profit. I hope this helps, and I'm looking forward to seeing you on future videos.